Accounting Superstars. This is Professor Don Bush. I've been a professor for about 30 years, CPA for about that long, and I've got great ways to explain accounting, so you've come to the right place. This lesson is designed for people that are in their first week of accounting class, probably their, first chapter of accounting. It's not that hard. Our objective today is just to make sure the left-hand side equals the right-hand side. If we can do that, we can do accounting. So here's what we got going on. We've got social media partners. What they do is they help other businesses with YouTube and Facebook and Twitter. And right below that, I've got the accounting equation. Assets equals liabilities plus equity. This is the most important equation in all of accounting, all of finance. And it also applies to our personal lives too. You know what? You and I, everybody, each of us, we have our own accounting equation. You may not realize it, but you've got an accounting equation attached to yourself here, whether you like it or not. So what we have here, assets, those are nice things to have. Things like cash, office supplies, computer, car. Those are great things to have if you have a business. Liabilities, those are obligations, things that you owe. And equity, that's sort of a residual account. It's sort of whatever's left over. It's kind of a weird one to explain, but it's a very, very important account, and we're going to use it a lot. A lot of stuff happens in this column right here. So here's what we're going to do. We're going to do some transactions, and then we're going to do the financial statements, all right? So here we go. It's really easy. Let's say that the owner has $5,000 cash and is going to put that $5,000 into his or her business. There we go, $5,000. Now, like I said at the start, the objective is to make sure that the left side equals the right side. That's all we got to do. So on the left we got 5,000, so on the right we have to have 5,000. Now, the owner does not owe anything to anybody. This is the owner's money. So we're going to put it under owner's equity. So I've got 5,000 on the left, 5,000 on the right. Things are good, and I'm going to call this an investment. An owner investment. The owner's putting stuff into his business. Let's suppose, too, that the owner needs some more money than that to buy a computer and a car. And so let's suppose that the owner goes to the bank and applies for a loan. And the bank says, sure, no problem, we'll give you a loan. And the owner gets a loan for $20,000, okay, 20,000 bucks. Now, I've got something on the right, I need something on the left, all right? So it's going to go under cash. The owner got $20,000 cash right there. So let's double check, make sure we're doing this right. 5,000 on the left, 5,000 on the right. 20,000 on the left, 20,000 on the right. All right, well, let's say that the owner goes out and finds a really nice car for $10,000. And so he buys a car for 10 grand. There we go. And pays cash. Now, here's what's going to happen. Like I've said, we got to make sure the left side equals the right side. But since the owner is paying out cash, I'm going to put a negative $10,000 here. All right, negative $10,000. Now check this out. On the left-hand side, we have a negative 10,000 and a positive 10,000. If you combine those two, you get zero, right? Zero. So on the right side, we'll leave it as zero. We won't put anything over here. So on the left, we have zero. Right, we have zero. We're all good. Okay. Moving on here. Let's suppose that the owner goes to the office supply store and buys some office supplies. Buys $200 worth of office supplies. But the owner decides not to pay cash, but to put it on his credit card. And so we've got accounts payable here. That's an obligation. The owner's got to pay this money back, right? So $200 under accounts payable. So on the left-hand side, I've got 200. On the right-hand side, I've got 200. It all balances. Hey, let's suppose that the owner also needs a computer. So the owner goes to Best Buy and buys a $2,000 computer. And the owner pays cash. So what we would have is a negative 2,000 here. Again, like the car here, it nets out to zero. Well, here a negative 2,000 and a positive 2,000 nets out to 0, so we don't need anything on the right-hand side. Moving on here, let's say that the owner does a job for somebody, provides a service, does some work, and the owner earns $4,000. Well, anytime you make money from doing your job, that's called revenue. So I'm going to make a note here, revenue. There we are. So, so what we'll do is we'll put this under owner's equity, $4,000. So I've got $4,000 on the left, $4,000 on the right. It all balances, looking good. Now, next, let's say that the owner had an assistant, an employee, and the employee earned $1,000. So the owner paid out $1,000. And anytime you pay out money to do your job, that's called an expense. It's consuming resources to do your job. So we'll call this wages expense. There we go. Now we've got, it's a negative 1,000 on the left. So to make this left and right balance, I need to have a negative 1,000 on the right. So negative 1,000, negative 1,000. Now some of you might be asking, well, why didn't you put it under wages payable? Wages payable represents an obligation to the employees. And the owner doesn't have an obligation. He paid the $1,000 that was due to the employee that helped him. So we're not going to use wages payable here. Now let's say that the owner pulled out money out of the business for himself. In fact, the owner pulled out $750 for himself. He needed to buy groceries and pay for his clarinet lesson. Now, the owner doesn't owe anybody this money. He's going to go buy groceries, and it's his money, so we're going to put it under owner's equity. Now, we have to think, is it going to be a positive 750 or a negative 750? Well, we got to make sure the left equals the right. So on the left-hand side, we have a negative 750. On the right-hand side, it'll be a negative 750, so it'll balance. Now, a lot of people, including a lot of business owners, think that this is some sort of salary expense, but it isn't. We call it owner withdraws. Owner withdraws. We're not going to call it some sort of salary expense, even though a lot of people think it ought to be. It's owner withdraws. And it's treated differently too. So you got to remember, when we pay workers, when we pay employees, we call that wages expense. When the owner withdraws money, that's called an owner withdraw. And let's see here, let's have one more transaction. Let's suppose that the business used up $50 worth of supplies. So let's have negative $50 for supplies here. So whenever we buy supplies, we put it as a positive number. Whenever we use up supplies, we'll put it as a negative number. Now we've got a negative 50 on the left. We need to have a negative 50 on the right. So what we'll do is we'll put here negative 50. And anytime you're consuming resources for your business, that's called an expense. So we'll have supplies expense. There we go. All right. Kind of out of room, so we'll end the transactions there. But what we'll do here is we'll add up the columns here. But you know what's not a bad idea before you add up the columns is just horizontally make sure it all works. It all balances. So we've got 5,000 on the left, 5,000 on the right, 20,000 on the left, 20,000 on the right. Now here's that weird account or weird transaction. Negative 10,000 and a positive 10,000, that nets out to 0. So we essentially have 0 on the left. So we'll have 0 on the right. 200, 200, negative 2,000 and a positive 2,000, that nets out to 0. So we have 0 essentially on the left and 0 on the right. 4,000, 4,000. There it is. Negative 1,000, negative 1,000, negative 750, negative 750. Negative 50, negative 50. Okay, that it all matches. And you might say, well, that was just kind of a waste of time, a lot of busy work. But sometimes you'll find you'll make a mistake. You might have, say, a negative 50 here and a positive 50 over here. That's easy to do. So next, what we're going to do is we're going to total up our columns here, get grand totals. There we are. We'll have Excel added up for us. So if we add up this cash column, we'll get $15,250. Now if we add up office supplies, we'll get $150. If we add up the computer column, we'll get $2,000. And if we add up the car, we'll get $10,000. Going over to the right-hand side, we'll do the same thing. Let's add up accounts payable. That's $200. There's nothing under wages payable. That's okay. Bank loan, $20,000. And then owner's equity. And you got to be careful. Watch out for these negative numbers. Make sure you add them up properly. We get $7,200. So now what we're going to do is we're going to add up these totals here and get a grand total. So we're going to add up the $15,250, add up the $150, the $2,000, the $10,000, add it all up together, and we get $22,400 or $27,400. And then we're going to add up the right-hand side, $200, $20,000, $7,200, and we get $27,400. Now we're proving that the left side equals the right side. And that's an important step because that's what it's all about. It's all about this accounting equation up here. Assets equals liabilities plus equity. And we have to just double check, make sure it does equal. And sometimes it won't, but I can assure you it's not because there's something wrong with this equation. It's because you made a mistake, okay? So you just got to accept it and figure out what you did wrong. And in fact, if these totals do not match, don't go on. It won't do you any good to go on. You're not going to find the mistake. You got to go back and find the mistake and fix it. All right. So going on to the financial statements. So here's what I'm going to do. I'm going to scroll down and here are the financial statements. So here's what we're going to do. We're going to do this income statement and then we're going to do this statement of changes in owner's equity and then finally the balance sheet. And they're really easy. They're super easy. We have to start out with the income statement. So I'm going to split the screen here just so we can see it easier. I think I'll split it right about there. And so we can see a part of the chart up above, and I'm going to go down here to the income statement. Now, in this point in your accounting education, in your very first class, there's only two things that go on the income statement, and that is it, two. Revenues and expenses, nothing else. Don't ever put cash on the income statement. Don't ever put owner's equity on the income statement. Never ever do that. It's just revenues and expenses. It's just that easy. Revenues and expenses, nothing else. So revenue is going to go right here on our income statement. And it looks like we earned $4,000 worth of revenue. I got it right from here, right in this chart. In fact, I can highlight it just so you can see where I'm getting it. So here we go. It's right there, $4,000. So I'm going to type in $4,000. And then next, I'm going to write down the expenses. Now we've got $1,000 wages expense right there, $1,000 wages expense, and it's listed as a negative. And it really doesn't matter if you list it on the income statement as positive or negative because everybody knows we're going to subtract away the expenses. So I'll keep the positive and negatives the same so people don't get mixed up. But this negative 1,000 is going to go right over here, negative 1,000. We also have supplies expense. Supplies expense, here it is, it's $50. And again, it doesn't matter if I list it positive or negative, but you do want to be consistent. So I'll take that negative 50 and I'll put it right over here on the income statement, negative 50. And what we'll do is we'll get our total expenses, which is going to be a negative $1,050. There we go. Now the net income is simple. All it is revenue minus total expenses. And there we have it. So it looks like it'll be $2,950. There we are. All right. Now, ladies and gentlemen, one thing I want to point out here, this owner's withdrawals, a lot of people think it's an expense, but it is not. It is never an expense. And I know a lot of business owners disagree with that, but it's just the way accounting's done. owner withdraws is not an expense. Do not put it on the income statement, all right? So what two things go on the income statement? Revenues and expenses. That's it, nothing else. So let's go over here to the next statement, the statement of changes in owner's equity. Now, this business was just started, just today, just now. And so the beginning owner's equity is zero. Now, the next thing here are the owner investments, and we have to look on our chart here to see if the owner made any investments. And sure enough, that was the very first thing that happened. The owner made a $5,000 investment. Now, the next thing that we do on this statement of owner's equity is add the net income. Well, the owner had a net income of $2,950, so we'll include that right here, $2,950. So all what's going on is this net income over here is getting transferred to over here. That's all that's happening. And then owner withdraws. So here's where those owner withdraws go. Look at that. We had 750. So I'll keep it as a negative number just so it doesn't confuse anybody. And then we have ending owner's equity. So the ending owner's equity, I'll sum this up. There we go, $7,200. And you know what? In this case here, it matched our chart. That doesn't always happen, but it matched our chart right there. So there we go, folks. There's our statement of changes in owner's equity. You know, the statement of changes in owner's equity, it never changes. It's always the same. So here's something that you need to remember about these financial statements. First thing, what goes on the income statement? Revenues and expenses, nothing else. What goes on the owner's equity statement? This is it right here. This is how it goes always. The statement of changes in owner's equity just requires a little bit of practice. So we're coming down here to the balance sheet. The balance sheet is super easy. So how much cash do we have at the end of the month? Well, we've got $15,250. So $15,250. There we go. Office supplies. Let's get the balance in office supplies. It's $150. And the computer's got $2,000 as the balance. And the car's got a balance of $10,000. All we're going to do is add up the total assets here. Add it up. But there we go. And I've got a check mark next to it, meaning that this is something that is really important here. In fact, what it is, it's the left-hand side of assets equals liabilities plus equity. So guess what's going to go down on the bottom half here? Well, liabilities and equity are going to go on the bottom. So let's find the balances for accounts payable. So accounts payable, here we are. Ta-da, 200, there you go. Now wages payable doesn't have anything in it, so that'll be 0. And bank loan payable, that's got a balance down here of $20,000. There we are. And now we're just going to add up our total liabilities. All right, our total liabilities, $20,200. Now let's go down to equity. The best place is to find it right here on this statement of owner's equity. Right here. Statement of changes in owner's equity. The balance, the ending owner's equity is $7,200. So let's put that right here. There we go, $7,200. And so lastly, our total liabilities on owner's equity is $20,200 plus $7,200. There we go, $27,400. So guess what, folks? Our total assets equals our total liabilities and owner's equities. So I put these check marks so it stands out. So all we're doing is verifying and making sure that our accounting equation balances. Look at that. That's the balance sheet. The balance sheet is actually my favorite financial statement. I think you can learn so much about business by looking at the balance sheet. Well, ladies and gentlemen, I hope this helped you guys out. And I hope you learned something, and check out more of these videos to learn more. I've got all these videos listed on accountingsuperstars.com. They're all listed out by topic. So if you're looking for a special topic, you can go there and find the video you want. And also hit that like button, hit the subscribe button. It doesn't cost anything. Just go ahead and click them. That way YouTube will know that you guys find this helpful. So until next time, over and out.